So we already talked about the lifestyle changes. So this is like a major changes in your life that you have to consider before anything else, okay? Before you consider everything, your income, your wages, your side hustle, all that, before everything, if there's lifestyle changes, married, divorce, birth, adoption, bought a new home, retirement, bankrupt, all that, you need to consider that first, and then consider what I'm going to talk about later. Okay? So I know we're going to talk a lot about like different income, wages, income, investment, income adjustment, all that, deduction, all that. It seems like pretty, pretty random. How to solve this problem like systematically, step by step, in an organized way. Really, really simple. 3 steps. So the first step is about the income changes. Okay, so basically we already talked about the lifestyle changes. So that's some vague part, vague decision, but albeit very important decision in your life. But after that, let's talk about money. Okay, so basically, talk about money. The money side is that everything that come into your pocket, right? The income changes, and then you're going to adjust that income, right? It's like a mini tax break, which I love to call that, right? So it's the adjustment of the income, and then it's the deduction side, okay? So basically, it's like a tax break and credit. So basically, income, adjustment to income, and then itemized deduction and credit. So 3 steps, really, really easy. So everything go inside and calculate the adjustment, and then some deduction. Okay, so for example, like wages, right? You start or stop a job. Let's say, come on. If you start or stop a job, that's a typical, job. So job, W2. So your W2 definitely going to change if you start or stop a job. So for example, if you start a side hustle, that's a typical 1040s like Schedule C. Okay, so for example, you got like and more from investment, we got capital gain or dividends and all that, which we will talk about later. Your spouse, right? Depending whether you have a spouse or you find that jointly or all that, right? That's major decision that you made earlier, right? Whether you got like find jointly or divorce or whatever, right? So you start, your spouse start working, stop working. If you got a spouse, and then this is like typical wage changes as well. And you know what? What about you say I don't work, okay? What about I already retired, right? So IRA, right? Retirement accounts. What about I take money out from that? Or if you like you dab a little bit into crypto, right? So for example, I didn't work, I invest in crypto, and you know what? I take money out from my crypto pocket. Okay, so that unfortunately is also a taxable income, right? That's the money side. You take it out, you change that into dollars, and you spend that, right? That's taxable income too. So yeah, even you just use that a bit. Okay, I know a lot of people will say, come to me, I say, just use that a bit, right? Just use that a little, use that for a bit, just for a bit. You know what? That will also consider. Okay, so you can't avoid that by using a bit. Okay, yeah, that's wage income, and of course some investment income, as I said, right? A distribution, capital gain, interest, rise, self-employment, all that. Yeah, that's income as well. And of course, as I just discussed, this is called the mini tax break. So for example, deductible IRA, contributions, student loan interest, and yeah, but a little bit about alimony, but that's like a pre-2019 period. So yeah, you don't need to worry about that for now, especially for now and in the future, because it's already past that. But that's pre 2019 divorce. You have to use that, and that is deductible. But post 2019, that's no deductions. Yeah, many years ago, that may be an issue. Right now, it's not an issue at all. Okay, so don't worry about it. But this kind of deduction, this mini tax break, even though it's called mini, it may seem or sound like much, but they will trim your AGI. Okay, so that's basically they can change how many credits that you are qualified for. So basically, that's kind of a tiny adjustment, but it's very important of your income. Okay, and of course, as I said, the final step is the itemized deduction and credit. That's the big stuff, right? So, and you know what? This everyone's favorite is also my favorite because this is called tax break. It's not like a mini tax break; it's like huge tax break. Okay, tax break as well as tax credit. So this really depends on on what you spend on money during that year, right? So for example, the medical bills and mortgage interest, property tax, charitable donations, child tax credits, education credits, and some premium tax credit. So basically, using the income and mini tax break and huge tax break. Okay, so income, you get everything, whether invest or you work from like wages and all that. That's income, and then adjust that income, and then the item of deduction and credits. So, next time when you file the tax, there's like organized way to do that, and of course, you need to just get anything, okay, a piece of paper or Excel and all that. You write down any changes when you compare this year with the previous years. Okay, you just compare that changes because that change is very important and will affect it. Okay, if you do it yourself, you're going to thanks me for this advice, and you know what? If you ask some tax pros to do it for you, your tax pro will love it. Okay, so yeah, that's all.